Hi guys, this is AG. So I'm a student and learning about market and finance. I've been in market for like 2 years, more than that, and thought of making a video. As you guys know, the lockdown is going on, and really, uh, a really good time for markets and those who are into investing. So it's a great time. So today, if I may take any name of the stocks, those are completely educational purposes. So be watchful of that. So as you guys know, that market is in a mayhem right now. So everything has been fallen, and the lot of wealth has been destroyed. So and this is invariably a very great time for investing and to build portfolios around very good companies and for the longer term. So longer term means not 3 months or 1 month, 6 months, even not 1 year. It's more than it has to be more than 3 or 5 years. For an investor to get stupendous amount of wealth to create that, it needs time. And market is in. I mean, uh, security market is a long-term game. So you cannot have aspiration to get rich very short term. You cannot do that. I mean, you can't expect that also. So I will tell about my style of investing and what I do. For me, mm, as you guys know, the retail investor don't have the luxury of having a lot of data. So you know, the, and the promoter analysis and the management analysis is very important in terms of investing. As you guys know that, mm, for me, I don't know how to do forensic accounting. So forensic accounting is very important for management analysis. So I don't know that. So for me, I always stick to the reputed business houses and try to find those companies. I mean, try to find around those reputed business houses. So that is first thing I do because management analysis is very important. Uh, Even if you are having a good growth, uh, I mean potentially a multi-bagger stock, but the management is dicey, then you can go wrong anytime. So be watchful of that. And also in India, fraud can happen anytime. So of course you have to be very careful about the management. So for me, first is management, and then comes the growth of the stock. So as you guys know that there is a good concept of value investing, that low P is always beautiful. Low P is beautiful if the company doesn't have growth in them. For me, yes, price is determined by uh, you know P multiple into earnings. Now, even if you have a stock which commands higher P valuation, that doesn't mean that in a long run it can't give you wealth. Yes, it can, if provided that it has good earnings potential. So always find, I mean, I like to buy those companies which can grow their income for the longer term. you know if I can give you some example. Okay, so all the stocks, if I may I say anything, those are for educational purposes. So as I was talking about the growth, so you know this is the time when you get both eggs in one basket. That means you can get value, also you can get growth at the same time, because all the good growing clean franchises are also down by 40-50%. So this is the best time to catch the fish at a very nascent stage. So this is the, I think this happens once in a decade. So those who, you know as they say, that those who invested money in 2008, as you guys know, the financial crisis of 2008, they have been rewarded handsomely for the next 10 years, 10 12 years. So this is again the chance for this decade, I guess. So In this time you can get good companies, clean franchises, clean accounting, everything is good, and earning visibility is also good at a very cheaper rate. I mean, valuation is justified also. Sometimes, I have seen those companies, those are close to their book values. I mean, you know book value, I mean the price to book is like point something. Those can also create wealth, but you have to find that, of course. If I say something like, say, Bajaj Finance is a good stock. I mean, this is a compounding machine, I would say. That company has been on a uptrend for the long years. I mean, 10 years. Now that is quoting a 50% discount now. So what more do you want? I mean, this is a lifetime opportunity, I would say. If the company is good, if the company can show you earning visibility, you should go for it. you know let's say like HDFC Bank, Asian Paints. I mean, these companies have been earnings superstar for like 20-30 years. For Asian Paints, it's more than 60 years they are compounding their earnings, as well as their stock prices. You have to find these kind of franchises for longer term. I know some people also like to buy value stocks. They may have not a good earning potential, but they are undervalued. So when the valuation becomes fair, they earn money. So let's say if a stock should command a 30p multiple, the stock is now, let's say, 10p. So the 20p is their earning, but that doesn't mean that the company can grow. Like, the growth may not happen, but the p rating, by using that, they can get some wealth. So that is the point. They do that. I mean, the value investing is one of the most important part for some of the investors, and that is also a good strategy. If you are well versed with the valuation concepts, then you can go for that also. For me, sometimes I could not value the company, so I always prefer the earnings. I mean, the good earnings franchises, I would say the consistent compounders, as I say. So that is the thing. I follow Mr. Buffett principle, and also I follow coffee can investing principle also. So I do kind of both. So in terms of that, I would say this is the time for me to buy more. So, and also, don't invest in all in one go. Try to invest in all the money in a staggered manner. So whatever, because everybody has limited amount of capital, so you have to generate most return with that amount of money. So do invest in staggered manner. Don't put all in one go. So if I could summarize my points, that go for I mean my point that go for good management. I would say best management, best accounting practices. Then go for good earning franchises, and good visibility of growth of their earnings. And third is that the valuation, and the valuation is cheap around whole market, so you don't have to worry about the valuation. Because, as you know, we like to buy uh, our daily needs at a sale. We like to buy anything at a sale. So this is the stock market sale. You can get some companies of 8,000 rupees a share. You can get those at 4,000 rupees of share. I mean, a share. So that is the 50% fall of a share price. So it's a best opportunity, I would say. So in the next video, I will be discussing uh, about my some shares, not necessarily in my portfolio, but what I like, what I don't like, I'll share in the next video. So that's it, guys. Thank you, and please do share, like, and subscribe the channel. And meet I mean meet you in the next video. So thank you.